Anurag, hi, morning, and thanks so much for your time. Give us a sense of the kind of handover first that we've seen coming in from the US markets, absolutely tepid, and we've seen some sharp cuts coming in on the stocks. On one side, you do have some reaffirmation coming in from Trump on this entire India trade deal. What are you making of this rhetoric?
Say good morning. So, um, Look, markets for the last 1 week are taking a bit of a breather in US, and some of that is more propelled by short positions, actually buying put options by the one of the prominent, the big short um, investor, right? And he took prominent short positions in Peloton, in Palantir, and Nvidia, right? Now, that aside, I think people are beginning to question the AI story and the kind of investments that are going into it. So, part of the story is that, and if that happens, the overall sentiment sours because you know that most of the gains, at least more than two-thirds of the gains in the last 2 years, are prominently coming from these 5, 7 companies. So that is a bit of a breather. It's fine. I mean, it's justified as well, part of it, but that's not something to worry about. That's the broader story. Other than that, I think market is also looking at some of the unwind of the tariff or maybe more sanity to prevail on the tariff side. Now that we've heard the Supreme Court and looks like they're leaning towards the logic that president doesn't have the unilateral power to impose the tariffs the way he has been doing around in the past 5, 6 months. So I think that is a bit of a good news. So I think if tariffs are unwound, I think inflation will drop precipitously and Federal Reserve will continue to cut the rates. On the other hand, we'll figure out whether the AI story is how much of the AI story is real and if that needs a bit of a moderation. That's where, Snehi, that's where we are. That's the interesting mix from
And
the
Anurag,
US.
hi,
Yeah.
morning. It's really been about the Fab Seven, right? And that always
Yeah.
concern about when this bubble is going to burst. Do you think are there early signs of some significant amount of cool off, or would you say it's too early to call that?
Now, let's, it depends where you are invested, right? So the Fab 7 is not a bubble. Okay. So, I mean, I can't speak so much of an Nvidia or a Tesla because they're still, look, Tesla is a car making company and Nvidia is still a hardware. Can you value a hardware company like a software company? I'm not sure. But right now it is enjoying gross profits of 75%. So I think that goes fine for now, right? But look at the other companies like Apple, Google, Meta. I mean, they're still at a multiples of 25 to 30. And they have such strong competitive moats and they have no near competition in sight. And all of the investments that are going into AI are coming from their balance sheet. So it's not that they've leveraged themselves with huge amount of debt and which is going to go bad. And so banks will suffer and will start a spiral on the downside. That's not going to happen. At worst, they will slow down their investments, which is even better, right? The companies will pass on more profits to the investors. So there's no bubble on these 7 companies. Bubble is outside of that. So quantum computing, there are certain stocks which have in 1 year they've gone 3,200%, right? That's bubble, right? And those companies have no revenue. Some of the rare earth company, rare earths, they were like $1, $2 stock. Now they're at 35, 40, $50. That's bubble, right? But major market, that's not a bubble. That's real story, right? And AI, we got to appreciate. I've been tweeting about this, that how the take Meta for instance, it has doubled the revenue in the last 5 years. Actually, 135% rise in revenue in the last 5 years. Workforce has risen just by 25, 30%. So AI is real. I think we got to recognize that. So bubble is in parts, but the larger US market continues to be a stable story. And I've been talking about it for the last 1 year, right? That I have no doubt that the story is real. The overall US market, Aisha.
Right. You also take cognizance of the Indian market and watch that as well very closely. While
Yeah.
the FIs continue to elude us, the earnings finally have made a comeback. That was the key concern last year
Yeah.
when the markets began petering down. Any thoughts here? Any India positions that you may have added?
Yes, yes, yes. Yeah. So let me put this, and I was trying to compile these numbers. Look, I'm a firm believer that the India story is there, but the number is nominal growth of 10%. Okay. So, I mean, look at this. This is I just plotted this. The Nifty mid cap from 2020 Jan till go a year back, right? Last year is flat. The returns were like 28%. Same with small cap 250, 28%. That's not the kind of returns that you can get for 10 years in a row, right? You cannot. So after a moderation of a year, now they look something like this, about 12% for Nifty in 6 years, 22% for mid and small, and Nifty 500 looks like 15%. So there has been some moderation, but I think there is a long way to go for even the mid and small caps. Nobody values them like the way they are being valued in India. So I think there is some way to go. I would be very happy if we have another year of absorption in the Indian markets, and things would then look very, very attractive. And in terms of FII story, I think I always count FII story as a distraction because look, consider the data high level. About 70 billion DIs have bought collectively about $70 billion this year, calendar year. FIs have just sold 17 billion. So who has sold the rest of the 53 billion? That's all domestic, right? So let's not look there. The market, Indian market is facing, it's the IPO capital of the world today. Everybody wants to list in India. That's good for the seller, but that's not good for the investor overall, right? So I continue to maintain this story. Moderation is good. It'll be good for the long-term investor. Why do you want a short-term return unless you want to just cash out and you're sitting on a bubble? That's not the case. So that's kind of my 2 cents. I like the sectors I like. I like healthcare. I like private banks. But outside of that, this is time to be a little cautious. There's no meaty return left in the market for now that investors should jump there. And I think that's what you see in the trends from the FI side as well.
Makes sense. All the action and traction has
Yeah.
been in the off market, so to speak. But good chatting with you, Anurag. Thanks for your time as always.